I think is going to be keeping an eye on the cost of doing works. I think now is a brilliant time to buy, because if you can get a good deal today, because the cost of doing works are so high, and with interest rates coming down, then it would be a good time to buy something knackered and sit on it and do it up and sell it in a better market with lower cost of doing, with more confident market.
If I were an experienced property investor looking at London only, and I'm experienced, I know what would I look for? I would look for distressed properties or properties that are good value. I don't only look for people that are being repossessed, but I would look for something in a good area that I know is going to rent well, that I know if it's secondhand, I can maybe add a bit of value by making it, by doing it up a little bit and renting it for strong. That's the area I'd be looking for. I don't think investors should be looking at properties they can do up and sell for a capital gain, because I think that is very, very dicey. And I think you're better off buying something, getting debt on it, renting it out, and looking for good value, because there is value out there in the market.
Probably looking at his portfolio with his or her portfolio with some anxiety, and wondering, what to sell, what to hold, what to keep. So yeah, it's not an easy time for a property investor.
People have always wanted to add value to property as an investor. The only way that you can really do that now is to add square footage onto a property. You can't buy a modern flat and refurbish it because you've already paid too much for it, so you're just adding too much capital into that particular investment. You can obviously buy something that's derelict or hasn't been modernized in a long time, and redevelop it and add value in that way. But there's not that many left. If we're sticking to the more sort of prime central London postcodes, which is our level of expertise, there's not that many new pockets left that have still got some genuine value to see growth.
Inside the mind of a successful London property investor right now is probably hold your breath and wait and let things settle. I think if you are a property investor, then you know that you can always pivot and take advantage of the market in different ways. And I'll give you an example about that. So whereas in recent past, you would buy properties to amalgamate them and make them bigger, maybe what you'll do now, instead of having a 1,200 square foot 2-bedroom, you'll end up creating a 1,200 square foot 3 or 4-bedroom, because that's what people can afford, that's what people are looking for. And when you look at institutional investors, there's a lot of investment in social housing kind of across the globe at the moment.
I think at the moment there is not one key mindset. I think it's a belief and understanding that London is the safest place to hold real estate probably in much of the world. We have stable democracy, and even now most people will argue sensible taxation levels and sensible holding costs for real estate. So it makes very good sense from a residential point of view to hold real estate. And actually I think London is becoming very attractive from commercial real estate as well for external investors.